What's going on, guys? Happy holidays. It is Tuesday afternoon. It's about to be noon. We have a scheduled live here, and today we're going to talk a little bit about just becoming a homeowner, all the different benefits and advantages that it makes and opens doors to you as a, average American citizen. We're going to talk about today and kind of go over all of that together. I have one of my real estate partners, Miss Maria Hickman, joining the stream today. Should be fun, but sit tight. Let me just update my stream details, title, description, all that fun stuff. So we have that in place. We should be good to go. Okay, let me go to my YouTube channel real quick. I gotta change. All right. There she is. All right, we should be good. Well, hello, friend.
Hello. How are
What's
you?
going on? Happy holidays, man. I'm getting in the vibe right now.
I know, me too. I'm getting so excited. Other than my kids being home for 2 weeks, that I'm not really looking forward to.
Is that already a thing?
Next on Monday, so they have like half days this week, and then
Oh, cool.
Monday they're home.
Sweet. Well, that sounds super exciting for you. Good luck.
Thank you.
I
Appreciate
hope
that.
you have a bunch of activities planned for them.
We do. Yes, my husband was very good at preparing a lot of things. We're going to have the Hickman Olympics.
Okay. Yeah, I remember you
And
telling me about that. That's
we'll
super
have
fun.
one winner, and then this year we are not doing gifts. We're doing events and experiences. So the whole week of Christmas we have Vegas stuff to do. So it should be
Right.
fun.
That sounds awesome. Yeah, sometimes I forget about just being uncle myself. I always want to kind of shower my niece and nephews with as many gifts as possible, but sometimes that is not the best plan and best idea because they they're still young, so they don't really get it just yet. So, yeah, I think the
Yeah.
experiences and all that stuff is a really good move. So,
Yeah, especially when they're older. You enjoy each
yeah.
other, create memories. It's fun.
True. Okay, so I wanted to just open up the floor a little bit to talk about when I was making my post for my video earlier today that I posted. Immediately came to mind kind of in the market that we're in right now. And again, the conversation of on top of everyone's mind is, kind of where rates are, where rates will be in 3 months, 6 months, a year from now. I have clients of mine, whether they're already pre-approved, getting pre-approved, they're trying to get pre-qualified. I have neighbors of mine that are, going through the home buying process with me, so on and so forth. But everyone is always trying to, I don't want to say get in their own way, because that's not the right terminology or way to phrase it. But I know that especially in the world that we live in right now with social media and content and all that stuff, when there's so much noise in the world, it makes it difficult for somebody that's never done something before to do something the right way specific to their situation without any outside factors influencing them. Does that make sense?
Yeah, 100%. Yeah.
So, yeah, I kind of just wanted to chat a little bit about, just in our own personal experiences. Again, and that's something too that I really always try to emphasize with my clients is I'm giving you not just professional advice, suggestions, education as a licensed, mortgage lender, but truly as somebody that has actually done it themselves and have taken these steps forward in this path that I'm trying to help them with, right? But not just the positive stuff. I've made all of the negative and, mistakes, and I've, taken myself off course before. So on. Yeah, that's to me, I feel like is the most important thing, right?
Mhm.
Being able to relate to somebody that's done it both good and bad themselves.
Right.
So, yeah, and how exactly do you interpret the average buyer's feeling in the current market first? Like, where do you think, or how do you feel that somebody that's looking to buy a house right now or would have an ability to buy a house views the market?
Well, I think it's confusing. Like you were saying, there's so much information out there, and you have one side saying, rates are too high. And then you have another side saying, now's the perfect time to buy. And it's
Hmm.
really, really hard to come to a conclusion. I think for everybody, there is a personal best, like what they should do personally.
Right.
But I think everybody does have to keep in mind that don't have to ultimately only focus on rates, because when rates were 2 and 3%, we were overbidding 100 to 150, $200,000 on homes. And so, yeah, you might have got a great rate, but you way overpaid for your house. So at what
Sure.
point does that calculate to be a good deal? I think right now, with the home prices kind of being a little bit more normalized, a
Right.
7% rate is a good deal, because here's the thing, you're getting the house at a decent price. You don't have to compete with 15 other people. And when rates do go back down to the 5% range or what have you, you can refinance. So you got your house at a good price and you just refinance the mortgage. To me, now is like the perfect time to buy, in my opinion. But there's so
Yeah.
many other people that have different opinions. It's hard to know who to listen to. But to your point that we've talked about many times, that's why you got to get a real estate team who knows what they're doing.
Yeah, I mean, just working with an expert or somebody that understands all of the different angles of exactly what's going on, not just in the market in general, not just with the other industry experts that you have to work with in the real estate industry to make a home purchase work and work to a buyer's benefit, right? Because on your guys' side, on the real estate side, you guys are negotiating price, you guys are negotiating closing costs, you guys are negotiating timelines, you guys are making sure that the different pieces of the puzzle on the paperwork side of things that has nothing to do with the mortgage loan are getting done. So yeah, super important. And when you are in a market where it's a bit quieter and you have an ability to leverage a lot of those tools in your benefit, to me is the first step. But I've just seen it from so many angles, and especially this last 3 or 4 years, where just everything in general has been crazy. I mean, I can't even tell you how many countless conversations I've had with, whether there were referrals to me or whether they, found me, just straight on Google as a local lender here in the community, whether they found me on social media. But even in the height of 2020 and 21 with 2%, 3% interest rates, I would continually have conversations with people that were waiting for the market to crash, okay? Literally people that were actively renting in this market that wouldn't even consider, even though affordability obviously was at an all-time high, they could absolutely maximize their purchase price or buying power because of how low interest rates were. Yeah, they sought out a different narrative, and again, they were waiting for the market to crash, which obviously we understand is not the case and did not happen, right? Regardless of how much I could lead them away from that train of thought, um, sometimes there's just people you unfortunately can't help. So, and that's really kind of the main reason for this conversation and why I continue to bring it up and why I continue to make content on it and have these conversations, is because sometimes you just can't change people's minds, and that's fine. I'm not here to change your mind. I'm here to educate you and make sure that you're making the right decisions as an educated borrower.
Yeah.
But sometimes we need help, right? I think, at least, especially when you're not in the, you're not a real estate professional, you're not a mortgage lender, you're not a CPA or a stockbroker, you're not in of the finance world often. It's nice to work with somebody or an expert that is able to help lead you down a path to success. So, did you have a lot of people back a couple years ago, a few years ago, that also had that same narrative of the market crash and they're waiting for all of that, which now
Yeah.
that's pivoted in this market where clearly there's been no market crash, but now we're waiting for rates to crash. Okay, or whatever. Again, this
Right.
conversation will continue and continue and continue on forever. But yeah, tell me a little bit about some of your some of your clients or sphere that you dealt with back then.
Yeah, I definitely had the mindset of that the market was going to crash. And even back then, here's the thing. I've been in real estate 23 years, and I've
Crazy. Yep.
seen, yeah, the ups and downs, the flows. And even at the height of our market, when I sold my home in 2007,
Hmm.
over in Henderson, I sold it for 850.
Okay.
It was at the height of the market. I had paid like 600 for it, sold it for 850 2 years later. Um, the person who bought it from me paid cash.
Okay.
Literally 2 weeks after the house closed, the market tanked.
Yeah.
And, and so I take this example of that man probably thought, oh my goodness, I'm I'm done. Like I just lost all this money. I'm done. That exact same house 2 weeks ago went under contract for 1.1 million. So what my point is that if real estate is one of these amazing, amazing investments, that if you hold on to it, it does come back. Now I get some people have to sell. They don't have the ability to hold on to things, to wait for the market to ride. But if you think of it as almost like a money market account or an IRA, and you look at real estate in that aspect, and it's a long-term investment, whether you end up living in it, keeping as a rental, or however you look at your real estate purchase, if you keep it long enough, it does come back. And you can't say that for all investments. And this was just a prime example. That was in 2007, sold it for 850. I remember watching it. It had gotten down to like 475.
You'll forever watch that house, by the way. You'll
Oh
always be
yeah,
interested in that house.
I wanted to buy it back,
Right.
a
Right.
couple weeks ago when I saw it go on the market, but and here it is now at 1.1 million in 2023. And so, I don't know that there's ever a perfect time to buy for everybody, but one thing about real estate is I truly believe it's not a losing investment. It just isn't.
Well, no, yeah, that's, been tested by time, by decades, we've had now a regular real estate market, mortgage world for almost 100 years now, you know what I mean? Where people have been able to buy and finance homes. And that's how the average American has established, and built their foundational, from ground level, base level wealth in this country. So yeah, it's crazy too. And like that exact example that you just gave to in 2007, we have to remember that 2008 housing crash and all of that era, which again, I was also in the mortgage industry at that same time as well. Because again, I'm second generation in the mortgage business, actually here in Las Vegas and Henderson, much like you. I was exactly here, which was the hotbed of real estate at that time in the early 2000s, where you can attest to this too, Maria. Like all of whatever you would have heard about how crazy the real estate and mortgage industry was in that time, a lot of that was happening here in Las Vegas because
Oh
a
yeah.
lot of eyeballs were here, a lot of people were moving here. The market was just, it was booming here.
Yeah.
But that 2008 timeframe, you're talking about basically they would call on Wall Street a black swan event, right? It's very, very unlikely that something like that will ever happen again in human history, only because what once was can't be again because we learn from that, hopefully, you know what I mean? You would imagine, but the financial industry learned from what happened in 2008. And to be perfectly honest with you, I actually had this conversation with a lot of people back this last year or so, where we just came out of, in the craziness of COVID, a mortgage forbearance world, okay, which a lot of people that aren't homeowners don't even know what a mortgage forbearance is or what that was put into effect during COVID. Because in my opinion, if we were ever going to have another housing crash or something like that ever again, it would have to be for unforeseen circumstances, and it would have had to have been for some sort of like world catastrophe, which again, COVID essentially was, right? But we were able to get through that. A lot of thanks, of course, to these financial industries, banks, the lenders that had these loans that put in place mortgage forbearance to be able to make sure to not prop up but protect the housing industry, right? And yeah, I have that conversation with a lot of people because that would have been the thing that was the catalyst for the next, I think, housing crisis. But again, here we are.
We
Two
got
and a
through it.
half years later. Yeah, exactly. So there's a lot, the industry learns. And again, that's something that across life you hope to do, but the industry learns because in this industry, you're dealing with the largest sums of money available to mankind. So where there's money, you have the smartest people in the world that want to protect that money. So you are basically betting with the house, if you will, when you're betting on real estate.
Yeah, absolutely. And, one thing that I have seen obviously through the last 20 some years is the building of generational wealth, which we've talked about before. And,
Yeah.
where else can you start off with zero money down, right? You've got the loan programs to prove it.
100%.
Zero money down. I help you get your closing costs paid. You literally get into a house for zero money down.
Right.
and you have this house that in 20, hopefully 15 to 30 years, you have paid off, and your kids get to have this home free and clear, and they can start their portfolio with that home, or maybe you buy 2 or 3 homes for very little down. Like, there's nowhere in the world where you can start with $0 and build generational wealth. Like, that is why I love this industry so much, is and it's available to everybody. Like, as long as, you have worked miracles with getting people mortgages that probably never thought they could get one.
Yep,
And
and those are the most rewarding, to be honest with you, because
yeah,
again, it is. That's what real estate, a good portion of real estate is meant for the average person that, is starting. You know what I mean? It's not for the barrier of entry is not so great in the real estate world where you have to come to the table with everything, 20% down payment, perfect credit, no debt. That's a myth, right? That's something that maybe 30 years ago, I'm not exactly sure myself because again, I wasn't, actively a participant, but I know that in the late 80s, of course, early 90s, it was significantly more difficult to get a house until some of these programs started to become available, where, of course, you saw lower what we call LTV, loan to value, meaning you have lower down payment options. And then from there, of course, more product availability to the home buyer. Of course, FHA has always been there, but I know FHA wasn't always as popular as it is or available as it is to the average buyer. But we just have so many different vehicles and tools that literally the average person, down to a 580 FICO score, can qualify to buy a home relatively easily. You know what I mean? Literally becoming a homeowner in 30 to 60 days. So
yeah, absolutely.
it's crazy. But I do want to give a real world example, though, again, because it's nice for us to always talk about what is, and, it does sound fantastic because it is fantastic, right? And we're passionate about it. So that's what we're supposed to be doing in, our roles as industry experts. And again, I'm always bringing this back to real life and real world experience. Again, like I said, I was in the mortgage industry right out of high school, 2004, 5, 6, 7, right? Making money right away, super young right away. Did I buy a house right away? No, I did not, because I had things getting in my own way. Okay. In 2007, when I left the mortgage industry and went to the service industry, I was very, very lucky through that '07 and 2011 time frame to be in the service industry making great money and to be, outside of what was going on in the housing industry and the recession. And it was a tough time for a lot of people. I was super blessed during that time. Did I buy a house? No, I didn't. I kept putting it off, getting in my own way. I remember at the time I was paying a $1,500, $2,000 a month rent back then. We're talking
Wow.
about over 10 years ago, right? And just, not worrying too much. I'm young. I don't really know exactly what I want to do. If I'm staying here, life is great right now. When you just don't, life just gets away from you. Like, people don't realize, like, if you don't have a plan of action, or if you don't put something pen to paper and commit to it, right? Life just moves too fast for you to stop it in the middle of where it's going. I
Right.
believe. You know what I mean? You have to make a plan, you have to have a reason for doing something, and you have to be ready to do that, okay? So, when I'm discussing or educating or talking about buying real estate, becoming a homeowner, or anything like that, I'm not talking to people that are not ready to become a homeowner, okay? I may be able to help them learn or, educate themselves on why homeownership is advantageous. But I would never try to pivot someone from, hey, I'm not ready to buy real estate yet, or hey, I'm just not in a position of my life yet, to then think, okay, well, in the next 30 days, we're going to make you a homeowner, because you're not ready, right? Regardless of what I would be able to do for you, it still might not be the best option for you because you're not ready.
Right.
But the people that are ready, the people that come to us and have these other roadblocks or barriers of entry stopping them, artificial barriers of entry, they need to be helped. You know what I mean?
Yeah, absolutely.
So,
And that
uh,
is what we are here for.
yeah, absolutely. And it's crazy to like my post earlier today that I put up. I was just going through some of the data and some of the different news articles with exactly the differential between renter's net worth compared to homeowner's net worth, right? You're just talking about like the average super duper simple average homeowner owns a $400,000 house, median price, you're not talking about $1 million homes, vast real estate portfolio, so on and so forth. But just in the comparison of a renter versus a very traditional average American homeowner, the difference in net worth is over 40 times. Like the average net worth of a renter is like maybe 6 or 7 grand, where the average net worth of a homeowner is somewhere north of 2 or 300,000 dollars.
Yeah, I believe
I
it.
don't even know where to begin with that. Yeah, exactly. Like, how do you even interpret that? Like, how do you begin to explain that to somebody and how important that is for their family, their future, their financial goals?
Well, it goes the very one of the simple ways to kind of gauge it is literally getting into a home with zero money down. You could be paying very close to what you're paying in rent for a total house payment, and it's automatically building equity as your home appreciates. So you're putting in for a house payment every month that you would be paying if you were renting anyway,
Right.
but the home is building equity. So you've got your equity in there. Plus, I think when you're a homeowner, you have more of a responsible spirit, right? You appreciate your home, you take care of things, you respect your belongings because it belongs to you. And I'm not saying that renters don't. I'm just saying that as a
Right.
homeowner, it's more top of mind because that washer and dryer is your washer and dryer, and if it breaks, you're paying for a new washer and dryer. So you
Absolutely.
just, what I'm saying, just tend to. So I think you're just more appreciative too about money. You tend to, I don't know, practice safer spending just because, you do have this home that you own that you don't want to lose. You want to continue to let it build wealth for your family. So there is a different mindset. At least it was for me when I'm renting versus when I actually own a home. It's just more of
100%.
a wealth building mindset versus I'm just paying for this because I need a place to live. So I think mindset has a lot to do with it. Why homeowners have more wealth, but also,
Right.
their equity is appreciating in their home that they're paying for every month. So that's a big part of it too.
Yeah, it's a great point. And with, being a homeowner too, there's definitely a very big degree of financial maturity. I feel like that when you and the discrepancy between renter and homeowner, it's not just talking about the equity that they've earned in the property versus the amount of rent that they're putting out. It's the just overall net worth of that person. Okay.
Mhm.
So you got to remember too, like when you're considering net worth, you're talking about the total value of that person's assets. Okay, so that includes their house, that would include, checking accounts, savings accounts, retirement accounts, all of that stuff. Not necessarily vehicles, but but just a
Mhm.
total analysis of that person's value, total value and assets. Okay, so when a person's value has grown so exponentially above where it would have been as a renter, that just means that they've established themselves and they're displaying more financial maturity than someone that, again, is in a renter's mindset. I've been again, like I just gave you an example. I was a renter for a very long time and
Mhm.
not a renter in, my parents' basement or on a buddy's couch. I was renting relatively expensive apartments or condominiums for over a decade. Okay.
Mhm.
And trust me, I wish I hadn't done that because again, hindsight's 2020, obviously, and I never want to look back, but had I done that 10 years ago or 15 years ago when I at the time could have done that, you're talking about a tremendous leap forward from even where I'm currently at in life as far as, financially or whatever. That kind of shaves off those years of, until you get to the retirement, ability to retire or ability to start, doing whatever that you wanted to do financially.
Yeah.
So the sooner that you get started on this journey, the sooner that your financial, again, maturity will start to grow. Like it has to be that way, right? Unless you're just someone that shouldn't buy a house, in which case we shouldn't have, started that conversation. But you know what I mean? Like, I mean, it's not for everyone. Trust me. Home
Right.
ownership and financial responsibilities are not for everybody. You know what I mean? Like, there are still people out there that. Another thing that I wanted to talk a little bit about too is like when you own a home, like what that actually means for you in the eyes of other creditors and other financial institutions. Because there's people out there that just they don't have credit, right? They don't have access to credit. They don't have access to you know you might have a $500 Target card or a $1,000 Bank of America credit card or whatever, and that's it. And that's fine. Trust me, like credit is not for everybody. It needs to be used responsibly. But when you become a home owner, okay, you immediately have access to, meaning like what would show on a credit report in your name, right? A credit limit that you would never otherwise be able to access if it wasn't for the house. Okay. When somebody then next time goes to pull your credit, they're going to see, well, this person owns a $400,000 house that they have a $380,000 credit line on. So they must have some ability to borrow responsibly. Okay. In which then allows other creditors, other financial institutions to invest in them, i.e., allowing them to borrow more in other forms of their, or in other areas of their life. Obviously, always borrow responsibly, but this is one of the tools and vehicles that also opens up those doors to the average American, right? To be able to actually borrow responsibly and have access to these other levers in life of how to, grow. Does that
Right.
make sense?
Yeah, yeah, completely. It is. It's kind of like a snowball effect. Once you start, you just keep building and building your credit, and that opens to other opportunities and things that you
Absolutely.
probably would never imagine, that will open up to you. Credit is something that it's a big deal. You do have to use it responsibly, but it's a beautiful thing when you do have that.
Absolutely. Yeah, if you're able to, and even just having an ability to access credit, okay? I know a lot of people that actually have a ton of available credit to them that use almost none of it, okay? Because available credit, again, is a uh, point of leverage for you if and when needed, okay? It's not something credit that I feel like that's a big in society. There's two very different camps when it comes to the like credit and how you use credit. A lot of times people use their credit to create debt, like to like create more debt for themselves, of
Mhm.
which they never had an ability to begin with to pay, to which then creates more debt for them, to which then will create a snowball effect, and they're going to be an amount of debt that they're never able to get out of, because
Yeah.
that's how debt works, right? Compound interest works like that. Now, it also works on the flip side where the more available credit you have available, right, with an ability to repay that credit, the more opportunities you can make for yourself, whether that's for business reasons or personal financing reasons, what have you. But borrowing responsibly and borrowing under the right mindset of why you're using that credit is super duper important.
Yes, absolutely. Yeah, it does. I mean, you think of people that get presented with either a business idea or an opportunity to buy into an investment, or a lot of those people don't have the cash right on hand. They do use credit sometimes to buy into those opportunities. So you can use credit to build your wealth, to give yourself opportunities that you wouldn't normally have. But people that, and I think too, like there's living to spend, right? Like where your thing is
Yeah.
in, those are the people who get in a lot of trouble. But having available credit as you get older and you know how to borrow it responsibly and pay it back, it can definitely be used to help build your wealth portfolio too. It can be a beautiful thing. You just have to be careful with it for sure.
Absolutely. And it's just like buying real estate. Like the more you understand credit, the more you understand these tools and what benefits they pose to you, the more you're able to use them in a mature way. So, like, I'll give you an example. Like with my wife, she, because she's still in the service industry, she deals with cash a lot, so she has cash available to her, what have you. But I still stress to her each and every time I see it with my own eyes. please do not use cash when you go to the store to shop or whatever, right? Now, clearly we have the money to pay for whatever we want to do in cash, but the reason that you would use credit, A, obviously, is to continue using whatever credit available to you that you can afford to do, but it also provides a couple different layers of security to you, right? Because once you give cash, just and again, this is just from my personal take on things and experience, so I'm not giving you credit advice, but just
Right.
giving you an example. um, Once you give and hand over that cash to whatever company or business or store you're going to, that cash is gone. It's very likely that you are never going to see that cash again if something happens or refund, blah, blah, blah. They'll give you store credit, what have you. But the reason we use credit cards, of course, is for the safety and security that they provide, right? Because you're using, the other what people in the real estate industry call OPM, other people's money, right?
Mhm.
So with that comes the security, the protection. If something were to happen, you immediately get refund on the credit card. They'll handle getting the money back because it's their money, not yours.
Right.
Just simple stuff like that. So and most people don't understand that one very, very important part of why and how you would use a credit card, right? Again, not because you can't afford it, pay it off right away. You don't have to wait for any special day to pay it off or what have you, but just using the tools available to you. And with that, circle back to to buying a house. What
Yeah, I mean,
tools are available to you?
a
Go ahead.
good example of that is a client that I've had for years.
Hmm.
Sold her very first home. It was, well, a condo. It was a tiny little two-bedroom condo. Um,
Okay.
she had did a 3.5% FHA mortgage. This is probably maybe 18, 20 years ago.
On the
And
original purchase,
I'm sorry.
on the original house that she owned in the condo.
Yes. Yep. And was in that for a little bit. She was younger, she was in her 20s, and then met somebody, got married. They moved into a different house together, but used the equity from the condo, took out an
Yep.
equity line, used the equity from the condo to use as the down payment of their new home,
Sure.
kept the condo as a rental. The rental payment was paying for the condo plus a good chunk of her new mortgage.
Right.
And then they had this home for a few years. They kept it. They started having kids, had to move into a bigger home, did the same exact thing with that home, used an equity line to use to purchase the new home. They have 3 homes now. The 2 are rented.
They're like mini real estate tycoons now, and
This
just
is what
because
I'm
life is
saying, like, use the money from the house to keep buying houses, and you're building generational wealth. You're building so much wealth for yourself, and you didn't have to take any money out of your own pocket, essentially. It came out of the homes. So,
literally.
credit is beautiful when used appropriately. It's awesome.
Absolutely. As long as you understand credit, can use credit responsibly, and you have an ability to repay what you're borrowing, okay? Obviously, always borrow responsibly. It is the number, you don't have millionaires and billionaires in the world without credit. Like, you just don't. Like, I don't even know. I'm trying to think of like the top 10 people in the world that wouldn't have built. I mean, can't even think of maybe like the railroad tycoons from hundreds of years ago, the oil tycoon. I don't know, like,
Right.
but you know what I mean.
Yeah.
Yeah, it just is what it is. It's part of how this game of life is played, and unless you don't want to play the game of life, and and again, sitting on the sidelines is like kind of a corny term, I feel like, especially in the real estate industry, but I use it all the time. But if you just don't want to play, then you just don't want to play. Trust me, there's not going to be any changing your mind, nor would I want to change somebody's mind that wasn't ready or responsible enough to partake in the game of life by buying real estate and becoming a homeowner. But for the other 98% of us, at some point in your life, the ability to an opportunity to become a homeowner is going to present itself. You know what I mean? Like, so
I know,
do
and
it the right way.
I wish I would have started earlier in life, and instead of selling the homes, I wish I would have done what my client did and used the money to
Mhm.
buy and to rebuy and to rebuy. I mean, I would be in a much better place right now too. It would be great, but learn from our experience, learn from our mishaps, what we didn't do. And especially these kids, I tell my 19-year-old all the time, by the time you're 21, I want you to own something. I want you to
Sure.
start at a young age. And helping
I
him with that is, I think, a parent's responsibility, teaching them about it.
Yeah, 100%. I feel like as a parent with kids that would be getting ready to move out, I think that the earlier that you could get that kid into a home as a homeowner of some kind, now granted, obviously, you probably will have to keep some sort of close eye on them
Mhm.
just to be extra sure. But between the ages of like 18 to 26 or 7, somewhere in that range, I feel like you have built-in roommates. You know what I mean? So
Mhm.
in some degree, there are going to be people that will willingly and want to live with your child or vice versa. And they're just,
Yep.
the rooms in your house essentially will become another financial vehicle, right? Where then you don't even have to worry about, hey, I'm going to rent this house out or rent that room. They're just there, right?
Yep.
So your kid gets to become a homeowner, essentially maybe renting a couple rooms out to their friends. Those friends are essentially the ones paying the mortgage on whatever. So,
Yeah.
yeah, the sooner you can do it, the better.
Yeah, absolutely. I know I started prepping my 19-year-old when he was 17. I added him as a user on my credit cards
Yep,
and
authorized user, nice.
yeah, never let him have one of the credit cards. He
Exactly.
didn't even know he had access to it. It was just something I did. And, he's when he turned 18, he had a 750 FICO score starting at 18. So
Right.
there's a lot of stuff that you can do as a parent to help your kid be in a good position, and get them ready for that next step of life for sure.
Absolutely. Well, good job, mom. You set them up for success literally from day one. Like a lot of people like wonder how these 16-year-old kids, 17-year-old kids, whatever, 18-year-old kids, going into college are able to access these, student loans or cars, whatever. And a lot of times that is from very, very responsible parents that have set them up for success from the very beginning, right? It doesn't mean that they're doing anything wrong. It just means that they're getting to start their life a couple steps ahead of everybody else because their parents started them earlier, if that
Right.
makes sense.
Yeah.
So yeah, it's a super, super big beneficial, jump off point for them for sure. So hopefully your son is very thankful.
Jury's still out, hopefully.
I got you. Okay, so I have a question for you, Maria. Do you remember the very first time when even the idea of home ownership became a thing to you? Like, I want to buy a house or anything like that. Like, what age group were you in?
Yeah, I remember it. My husband played for the NFL. He played for the Detroit Lions, and
Sweet. Okay.
we got married in 1998. He had gotten released from the Lions like a few months after we got married,
Okay.
and long story short, he had to go back to college. So we had to move to South Carolina for him to finish up his degree at USC in South Carolina.
Okay.
And I remember telling him, "We're gonna buy a house." And he's like, "We're not gonna, like, I don't even have a job. I'm going to school. How are we gonna buy a house?" I'm like, "We're gonna buy a
Right.
house." So I was 21 at the
Okay.
time, and I got a job working at Claire's Accessories as an assistant manager. I was making $23,000 a year.
Okay.
Kevin was a full-time student stacking newspapers after playing in the NFL for 4 years, for like $100 a week. And we were living our best life. We were poor as that, but we were just having a blast.
I
Thankfully,
believe
we
you.
did have some money for like a down payment. We had a little bit. We did an FHA loan, 3.5% down,
Okay.
and we bought our first home for $80,000.
Okay.
We were there for 2 years and realized our very first profit in real estate. We sold the house for 120.
Awesome. How long thereafter that you guys bought the house did you sell it?
2 years.
Oh, wow. That's incredibly what, time period was this again? Was it the
This
early
was
2000s, late 90s?
this was we bought it in 99 and then
Okay.
sold it in 2001.
Dang. Yeah, good timing.
Yep. Yep. But, people thought I was crazy. It's weird looking back, like, why was that so crazy? To
Yeah,
me, I just knew that was the right thing to do, but people thought it was crazy. My family didn't understand why I was doing that.
right.
And when I sold that thing for 120,000 and had that much profit in it, it was like, okay, are you going to listen to me from now on? I know what I'm talking about.
Right. Now, who gave you the original idea of buying a house, or was it literally just you? Did you hear it? I'm assuming did your parents own houses, family?
Yeah, my parents have always owned their own home.
Mhm.
So it probably was just built in me that this is what you do. You buy a house.
Okay.
I don't know that anybody ever put it in my brain. I think it was just something like, if we're going to go down there, I want to own my own. I want my own
I like
property.
that. Yeah,
Yeah.
100%.
So I think it was just my idea. I don't remember though, but I did have very good examples and role models in my parents, because my dad was of the old Italian generation where you did not take a mortgage, you did not take a car loan.
Yeah.
Like, my dad paid cash for everything. If he couldn't
Right.
afford to pay cash, he wasn't buying it. And so I saw a very responsible way of utilizing money in him. And I think that had a lot of effect on me and in the way that I did my dealings as an adult.
Right. No, that's awesome. Yeah, someone had set you up for success without you really even knowing it. And then life kind of took you with it and put you in a position to be able to do that. So you just capitalized on it. So that's amazing.
Yeah.
Yeah, it's amazing. It's honestly like what you can do, especially in today's world where again, the opportunities are there. Like this is not a tough, difficult. Now I know that right now with how interest rates have been the last 6 months, 12 months, we've had to become a little bit more creative, think outside the box, and understand and educate more than ever. Okay, so again, why I'm always preaching and advocating for the importance of who you partner with mattering, because these conversations have to happen. Okay, when you're buying in a what would be considered more of a higher interest rate environment than normal, or a lower inventory environment than normal, or affordability is lower because of where rates are, so we have to introduce an additional borrower onto the file. How do we do that to regardless of what you have to do, right?
Right.
If the desire is there and the ability, right, the opportunities are there to make it happen. So it really all just comes down to the partners that you pick to work with, the experts in your community, and then what the game plan is for you once you become a homeowner too. That's another big part of the equation that people don't talk about enough, because we're always wanting to find deals and get the best price or get the best rate or whatever. But this might just be me because I grew up in the mortgage industry, so I understand it a lot more obviously than other people. But your house almost becomes like your asset. Your house asset becomes a like living organism almost, right? And it kind of evolves with you, right? Because as you become a homeowner, you're doing a couple of different things simultaneously. Of course, paying your rent, your mortgage payment as if you would rent, lowering your principal balance, and then of course here in Vegas and a lot of the majority of places in the country, luckily we experience home appreciation. So the values of homes go up, prices of homes go up. So those two things working simultaneously are in your favor, right? So as that happens, it opens up more opportunity to then, as rates come down, refinance or tap into equity to pay off other high interest debt that you have, or in the example that you gave, to leverage the equity in your property to buy more property, or so on and so forth. So
Yeah.
I think that conversation, when I'm talking to somebody even for the first time, is something that I bring up right away, because it has to be, it's a long-term thing, relationship, all of that stuff, right? So we'll get you into the house, but what is 1 year from now, 3 years from now, 5 years from now? How long do you plan on being in the house? 7 years? Yeah, it's a true partnership, I feel like. Do you
Yeah.
do you feel
And
like
one
that with your clients?
Yeah, 100%. It is definitely a partnership. We're in it for the long haul together. And in the beginning, starting off with people too, I still think there are some who are afraid of rejection, right? So like they don't even get started on the possibility of home ownership because they don't want to go to the lender and hear the words, "You've been denied." That's scary to
Right.
some people. And I just want to encourage anybody, if you're struggling with that, if you're thinking, "Oh God, I have terrible credit, or I can't, I don't want to hear the words, 'You're denied,' one more time." I
Right.
just I want to challenge people because a lender that has denied you and hasn't stuck with you is a crappy lender.
Yeah,
Because,
unfortunately.
right? So if you've been denied, that lender should be helping you get to a point where you can be approved. And even if it takes 2 to 3 years, you guys should be tandem side by side with each other, working together, getting it to, as long as you're willing, right? You've got to have a willing participant, somebody who, is willing to do the things to get their credit. So when you're thinking about home buying, oh, it's a year or two away, I don't care. Get with your lender and get started on the process. Even if it's a year or two away, you've got to build that relationship with each other so that when you are ready to buy, your buying power is huge. Your credit's
Absolutely.
great, right? You can get the lowest down payment. You can get all the perks of all the loans that are out there. So, I just don't want anybody to be like, oh, it's not for me because my credit's bad. No,
Right.
there's a way to fix it. There's a way to get it to where it needs to be.
Always, literally always. The only thing that you have to, the only caveat to that is how long or what the timeline looks like. But you will always have an ability to fix whatever needs to be fixed or improve on whatever needs to be improved and make it happen 100%. You know what I mean? Unless you continue to make whatever the same mistakes over and over again. Clearly, then that would just extend your timeline.
Right.
Um, Another thing too that I really emphasize a lot when I'm talking to my clients, and again, first conversation, a lot of it is education, a lot of it is understanding the processes. But one super duper important thing as well that I think that needs to be discussed is, what is a mortgage lender? You know what I mean? That's one thing that I talk to my clients about is, hey, by the way, just so you understand the difference, is I'm a mortgage broker. Okay. So the difference in a mortgage broker, mortgage lender, and a depository or bank like Bank of America, Chase, Wells Fargo, what have you, is as a mortgage broker, of course, I still have a responsibility to the mortgage lender to make sure we're doing things the right way, properly, ethically, etc. But I am the partner of the applicant. Okay. Realistically, right? I'm the one that's helping you from the very, very beginning put together what would be your ability to qualify for a home loan. As a mortgage broker, one of the things which it just conveniently happens to be this way is we don't make credit decisions. That's not what a mortgage broker does. It's not up to me to deny somebody or approve or whatever. But it's my responsibility to put you in a position to be able to do and achieve the goals that you're looking for. Okay. So we advocate alongside you. Now, another part of what I do and what I think is the most valuable thing is I'm literally the one doing everything with you from the very day one, way after you buy the house, get into the house, etc. Right? I'm the only person you're having to communicate with, work with, worry about, all of that stuff the entire step of the way. It's so much different than if you go to like a regular lender, or you go online to one of the online lenders, or again, definitely to Bank of America, Wells Fargo, Chase, where they're responsible for their, they are the lender making the decision of telling you yes or no with no other communication other than that. Are you approved? Are you not approved? Okay, if I'm not approved, why am I not approved? Trust me, they are not going to answer that question for you or help you any further than that. So there's a big difference. You know what I mean? I feel like that needs to be a little bit more understood from the buyers in the market of like who the partner is, right? The broker, the
And
lender.
not all mortgage brokers are like you. They
No, you
still
would.
deny
Yeah,
it. Hold on.
exactly. You hope that they are because that is essentially their role. That's what you're
Oh,
supposed to be doing. But yeah, so just do your due diligence and understand the partners. Hopefully, make sure they're in your community. Much like you, Maria, too. That's another thing too. As a local partner, like I tell people, like I go to the same restaurants that you go to. I'm in the movie theater with you. I'm at my, niece nephew's baseball game or whatever, right? And I have a responsibility to the community to be able to serve them a certain way, right? If you're working with somebody that's not serving you the right way, trust me, they do not want to see you in person, right? They're not going to show up to your closing like I do every single time with a smile on their face, gifts in their hand, and ready to go, right? They're going to be very, very hard to get a hold of. So, yeah.
yes, I've ran across some of those before.
Yeah. So work with somebody that is in your community, has your back, local expert like Miss Maria here, who will knock it out of the park for you every time. What
Yeah.
else? That was pretty good. That was fun.
That's it. I got a call at 1 o'clock I have to get on.
Perfect
So
timing.
yeah.
All right. Well, I appreciate you hopping in, and hopefully maybe we can do 1 or 2 more of these before the holidays kicks in gear here, because I know everyone's going to start hibernating here towards the end of the month, which
Yeah.
is crazy to think it's almost 2024. I don't know where the
Nuts.
time's going. It really
Thank
is.
you for having me on. I appreciate it. It was
All
fun.
right, buddy. You're super welcome. And Maria, just remind us all where they can reach out to you. Like, what's the best modality to get a hold of you if people are looking?
Yeah, Instagram is probably my favorite. It's realtor underscore in underscore Vegas. That's
Got
the
it?
best way. And you can always just send me a message.
Perfect. All right, guys. Again, Maria, thank you so much for joining. Mario with the Escobedo team here, your local mortgage experts. Again, guys, let our family